everybody, it's Chris here from Student Education with the 4 majors and analysis update for the 9th of February 2012. It's going to be looking at our euro against US dollar pair to start with out of our 4 majors this morning. 6 screens in front of us, starting with daily, working our way through until the 5 minutes. Okay, so what's been happening? Well, yesterday, very indecisive. A nice doji after a bull run yesterday, the previous day, apologies, after a slight consolidation of a week or so. Clearly you can see the consolidative range, and then on what's today? Tuesday we had some good news that there was a potential yes to the measures imposed by EU and IMF for the next Greek bailout, and we saw people just jump in and buy the actual sentiment. So it took us right up above the prior resistance here, and the yesterday pretty much pulling back but never closing lower, trading lower than the previous high, just here roughly around the 1330 mark. Sorry, 23 mark, my apologies. And then today, or the Asian session, pretty much pulling back to those lows again that we saw yesterday, and then bouncing higher going into the European session this morning. So what is exactly that we're looking for this? Well, ideally we want to see after indecision, we want a decision. So if price can still stay above this level here, then what we could be seeing is potentially a support being forged after a noticeable resistance, and then we should be seeing price heading higher. If that was the case, then the likely scenario would be something along these lines. So first move, the consolidation above the moving averages, okay, a pause after this 3-week move, a consolidation, and then another move. And ideally what we're looking for is another move of 100% of the initial move. Okay, so this is the first move, then we like a pause, and then another move to the upside, and that would take us roughly to here to this 100% fib extension here at 136500. And if that now ties in with price support and resistance back here, going through the early parts of November, a lot of resistance through September, October of that same time frame. So clearly heading towards an area where the institution moving average, if we ever get to that area, would potentially be together. So that's the likely scenario as it stands now. The one thing to notice, the CTC on this particular time frame, the daily, we have our blue across the board. Everything's in favor for longs, so we shouldn't be looking for any shorts until such time as it's actually trading below the 13,2300 mark. Breaking below that would obviously close below the prior resistance, which hopefully is going to be our new support. And if that is the case, then we should be looking for shorting opportunities. But as it stands now, closed above a prior resistance, as long as price is moving higher, then we should be seeing further highs to the upside. First port of call potentially is here just below the 13,3500 mark at the 50th pence. Next one will be here at 61.8, and ideally we're going to be heading our way to those areas here around the 100%. Looking at all our intraday time frames, you can quite clearly see that they're all blue across the board. Yes, there's a bit of red in between, but noticeably price action as we stand now is pretty much more blue than red, which coincides with that upside move that we've seen recently. Here on the hourly, you can quite clearly see higher swings depicting upside movement, and sure enough, pullback. A lot of hammers here, faking people in, and then we've seen price move to the upside quite aggressively. 1323, as I mentioned, want to see price trading above. Pull back slightly on the Asian session this morning here, however, forging at a nice bottom here at 1323. A lot of wicks, more price action at the top end of those candles, and then she's actually moved higher going into the European session open this morning. Can we see price taking those that momentum and driving forward? It remains to be seen. So as it stands now, as mentioned on the daily, our 50% projection point here at 1334 would be a potential target for our intraday. So if we just put that in, 1334, if I can just get that going. Oops, not 1, 4 would be good. You can quite clearly see that it's way up here. There's a good 30 pips between here and the next potential target. Next up is sterling. Let's have a look and see what happened to cable. A lot of momentum in the past couple of days, pretty much candles cancelling each other out. We had a hammer, a lot of indecision spinning top, and then we had this hammer doji. Price not really breaking below 1598, 15,800 in closing. We're just seeing a lot of trades below it, but however, those candles forming above it. And then we saw a nice bullish up candle. That was after the news 2 days ago, with the Greek bailout potentially becoming reality. But as you can quite clearly see, as we've headed towards that 1590, 9500 mark, the institutional moving average prices reverted to the downside. Yesterday's candle cancelling out all of the previous day's momentum, and this morning on the Europe and on the Asian session, prices testing that 15800 mark, which happened to be price support, but not closing once below it. So, and going into the European session this morning, prices are heading higher. So, as it stands at the moment now, if price can still close higher than 15800, we should look for potential momentum or reattempt at those 1595 or 15900 marks quite soon. CTC on this time frame, the daily, is still very much extended to the upside. A lot of momentum. We are seeing a pause now as we head into this institutional moving average. You can quite clearly see back in late October, early November of last year, that institutional moving average acting as a clear ceiling level. Got to break above that to be still classified as potentially long-term bullish, and if that's the case, then we should be looking for ultimately the highs over here of that prior swing here at 1500 as our potential target long-term. Until then, as we want now at the moment now, we want to see price trading above 15800. If it closes lower, if we get a bearish engulfing candle here, then we should be looking for potential targets to the downside, and if that's the case, then we should look at the high here, this range, a break at 23.6, the 23.6 here fib, and then we should be looking at 38.2, the 50, and the 61.8 is potential targets to the downside, if and when price closes lower than that 5800 mark, okay, with a bearish engulfing. The more it sits above here, the more likely is we're going to see a reattempt of those highs. If we see a break lower than 1500, then we should be looking for potential targets to the downside. Just looking at the 4-hour chart, you can see quite clearly a beautiful trend to the upside on the 4-hour chart. All very well and good, awesome, you know, breakouts, pullbacks, continuations along the way, fantastic movement. However, as you can see, as we head towards that 159500 mark, let me just put that in so you can clearly see it, 159500, there we go, above us. You can see that we are starting to see relative strength index, which are plotted over here, starting to slow down. You can see making higher highs, but relative strength telling us that momentum is starting to shift now, doing more buyers to sellers potentially as we head towards this ceiling level. So ideally what we want to do is, yes, if price can maintain itself above the 50% line, it'll mean that there's still bullish momentum. However, just be aware that there's more indecision going into these highs, and we're seeing more potential selling contracts probably being filled as we head into this, so we could see a pullback. But if we can break above 159500 as seen on the daily, that will give us some food for thought for further extensions higher. If we don't, then we could see potentially more happening below the 50% line on the RSI to give us an indication we should see bullish consolidation. And as I mentioned, you can quite clearly see there are a lot of support at 15800. If price can maintain and close and stay above that area, then we should be looking for positive consolidation. And if it breaks below that with a lot of momentum to the downside, then ultimately we should be looking for further shorting opportunities to the downside. Potentially one here that really stands out is the 156,500, which happened to be prior resistance not so long ago. Next up is US dollar Swiss franc. Let's have a look at this. This pair we are pretty much testing the support here, very very tentatively bouncing on the support. If we get a break below that, a clear break below that, then we're going to see further extensions to the downside. The negative side of this would be that if we head towards this 8600 mark over here, this is where the area that we saw on the Euro Swiss franc equivalent price was being pegged by the Swiss government. If we get towards this areas here, you'll probably find that on the Euro Swiss franc we'll probably be trading quite close to the 120 mark. That would bode unfavorably because we might see pretty much intervention from the Swiss government again. But you can quite clearly see how the CTC is set up for further shorting opportunities. The only thing in the way here is the support. The longer it goes along here, the more likely is we're going to have a bounce higher. So we need a break to the downside. Yesterday's candle trading very, very small, indecisive, more trading range at the bottom of that candle. Today's trading range, very, very indecisive again on the Asian session. And as we speak on the European Open, you can see we are testing those lows. So break today and close low, and that would definitely confirm that bearish sentiment is still looking favorable for shorts, and we should be looking for opportunities to the downside. But we won't do anything until we get a clear break and close lower. ideally give this next candle to the market. We want to see momentum truly showing that it's bearish, and then we'll act on that. We don't want to trade any potential fake outs, as price more likely to bounce the more we actually find support along this level. Looking at the intraday, you can quite clearly see on the 4 hour, for example, that area of support, and you can see quite clearly over the past number of hours, 20 hours or so, we've seen price pretty much hugging that bottom end. So a lot of indecision, negativity here, more price action to the bottom, pretty much dragging price down, and the last 4 hour candle very much in favor of downside movement, however hugging the top of that. Let's wait for this candle, the hourly candle, to close lower to confirm that momentum is looking short at the support, and if that's the case, then we've had a breakout. We could potentially look for a potential pullback of some sort before we see a second leg continuation to the downside. Hourly chart showing that momentum, consolidation here against the downside trend, breakout, the pullback. We want to see price failing now to trade higher again into this consolidation range. You can see quite clearly a price support here on September the 1st. Back here testing through the 7th and 8th and going into the 9th breakout. So we've got to see a price failing to rally above this price support area. If it fails to, then we're going to see market sentiment starting to build up favorably for further shorting opportunities for the remainder of the week. Okay, last pair of the day is US dollar Japanese yen. Let's have a look at the daily. Whoa, extensions higher and higher. We've had going to our 5th day of consecutive upside movement after great news from the US non-farm payroll figures on Friday last, and you can see momentum just been building since then. Heading up towards the 50-period moving average here, just shy of the 73.30 mark, but nonetheless CTC is looking good for the first time in as many weeks. We've started to see things really progressing higher, looking fantastic for further extensions for the remainder of this week at least. And this all pretty much after word initially that we were looking at the Japanese government potentially looking to re-intervene as prices were moving low over the past month or so. So looking good. Prices moving to the upside without any intervention, which is great. US dollar strengthening against the Japanese yen, which is what everybody wanted to see. So yeah, as it stands now, get above the 50-period moving average. We should be looking for the prior high up at the shooting star area, just below the the 77.80 mark. So which will bring us back to roughly around the institutional moving average here at 78. So as it stands now, we should be looking for nothing more than long positions, hopefully on the US dollar Japanese yen pair. Let's have a look at intraday. Most time frames, every time frame is looking blue across the board on the correlations, on the CTC strategy, and we should be looking for further extensions to the upside. Looking at the 30-minute chart, you can see we've breezed past the price resistance level here that we saw yesterday, early morning yesterday. And as long as we can stay above these areas here, then we should be looking for price to build on that momentum and to head on higher. 77.10 here would be our intraday support. As long as price stays above that area, then we should be looking for consolidation with a potential upside move. Break below that, then we should be looking for consolidation further to the downside with primarily 76.95 a potential target, with an outlook potentially at 76.75 as the next one, and a third target roughly down here at 76.50 before we see price retesting that 76.15. So as it stands now, intraday support should be the 77.10 mark. As long as price can stay above that, then we should be looking for further extensions higher. A break below that intraday, then we should be looking for these areas to the downside as potential targets. That's it for today, guys. Hope you have a fantastic trading day. Keep it simple. Make sure that everything's in your favor before taking a trade. Importantly, make sure that your money management rules all fit or tie in together, and enjoy it. Keep it simple, as I mentioned, and trade serenely.